Okay, child, we are going to study the business objectives today. Uh, we need to define what are the objectives, and we'll talk about what are the different types of objectives of different types of businesses. What are the objectives? Objectives are the measurable targets of a business that business wants to achieve in future. That business wants to achieve in future. Why business needs to make objectives? Every business makes objectives. Why business needs to make objectives? Because the objectives give a sense of direction to the business. Sense of direction. And then employee can move on to that direction, and they can achieve whatever business wants to. They can provide specific targets for future decision making process, for making a future strategies. They also become means of measuring the success or failure in future. Business can identify in future that we planned that we are going to do this, whether we are actually doing this or not, whether we have achieved that or not. Success or failure in future. So these are the some of the importances of the making objectives for the business. We have a criteria about the objectives that is called a SMART criteria. We'll try to understand what is that SMART criteria. SMART is an abbreviation of S for specific, that shows that business objective should be specific, uh, that should be focused, and that should be determined. We cannot say that business wants to do something in future. Business would specifically say business wants to achieve profit, business wants to achieve growth, whatever. So if the objectives are specific, then only they can be called objective. They should be measurable. It means that they should be expressed in mathematical terms. A business should state business wants to achieve profit of 15%. So this is what we call measurable. Then achievable. It means that business should not set those objectives that are impossible in nature in the time frame that business has given. It will demotivate the staff irrespective of motivating them. Business should set such objectives that are achievable, and they are easily achievable, rather they are very difficult and seems impossible. Then they should be realistic and relevant. The R, realistic and relevant. It means that Objectives should be according to the resources that company has, and objectives should also be relevant to to their needs, and then time specific. Objectives should be described in time limits too, that the business wants to achieve 20% profit in the coming 2 years. That seems specific, measurable, achievable, time specific, realistic, relevant. But if business would say that business want to achieve 20% profit, that is measurable, yes, that is specific, yes, but that is not time specific. So objectives should be time specific too. This is the criteria that we establish for making of objectives. If objectives are smart, then only they can be called right objectives. Now we'll talk about the objectives of private sector businesses. There are many objectives that private sector businesses might have. The first one of those objectives is profit maximization. Profit maximization is simple, an effort to increase the profit in the future. Uh, this is the core objective because of which businesses exist. Profits are important because entrepreneurs have invested into the business because they want to earn profit. So simply it means that they want to increase their returns from whatever they have invested into the business. There are multiple reasons for those. We need to pay dividends to the shareholders. We need profits for that. We need to pay dividends to shareholders. Business needs profit to grow. Profit to grow. The business need, if we have profit, then only we can reinvest that profit and we can ensure our growth in the future. But there are certain limitations too when we make the profit maximization as an objective, as the objective of the business. If we focus too much on the profits, especially in the short run, that might allow the competitors to come into the market. Because for the maximization of profit, we will be charging higher prices into the market. That will give an option to the competitors to come into the market. They might charge lesser price and they might come into the market. This will give them a competitive advantage. Competitors may come into the market. Focusing too much on the profits may sacrifice the layer time of the businessmen, the entrepreneurs. And this is very difficult in case of small business owners, because if they are putting all of their time on earning profit, they might have some social issues with their life. And we are going to study a concept in future that is called work-life balance. We might say the work-life balance might be disturbed. Profits do not mean that business will be necessarily successful in the long term too. So these are a few limitations that are related with the profit objectives. Now we are moving toward the another objective, that is profit satisficing. This is very simple concept, earning such profits that keep the owners satisfied. Profit satisficing. Earning such profits that keep the owners satisfied. They are okay with whatever they are earning. Profit maximization was the aim in which they are always trying to increase the profit. Profit satisficing is the aim, especially for the small businesses. When they earn a satisfactory amount, the owner become okay with that. The owner become comfortable with that, and they do not try to earn more than that. Then another objective of the business is growth. If we talk about growth as an objective, it means the increase in the size of business. We have studied it in the previous chapter too. And we have studied that with the growth, business can obtain certain advantages. For example, business can obtain economies of scale, business can have higher market share, uh, business can exploit more suppliers then, because business can buy at the cheaper rates. So these were different benefits that business can obtain by profit satisfies by the growth objectives. But the growth has certain limitations too. Too much expansion can lead to cash flow problems. Business can spend whatever the cash business has on the growth strategies, and as a result, business might have cash flow problems. The shortage of cash flow problems can lead to serious problems. If business focuses too much on sales growth, business will have to sacrifice profit. For example, a business tries to sell a product on buy one get one free type of things, strategies. It will yes, it will increase the sales revenue and the growth of the business, but it might sacrifice the profit. It's not necessary that business always obtain economies of scale. It's not necessary that with the growth of the business, the cost of business will fall always. It might happen that with growth, business might have some diseconomies too. For example, communication problems. There might be some disadvantages like diseconomies of scale. And that diseconomies might increase the average cost of business, making it uncompetitive in the market. Another objective of the business is increasing market share, that is related to the growth objective. We have earlier studied what is market share. That market share is the percentage sales of one business in comparison with the whole industry. So to obtain more goodwill, uh, to obtain higher value in the market, to obtain more economies of scale, business might try to increase the market share. For example, a retailer might be keen to hold more stock and to sell it more in the market because of becoming the largest selling brand in the market. Uh, there is another objective behind increasing the market share of the business, because if the business has higher market share in the market, then business will purchase more a number of goods that might give business bulk buying discounts that might lead to the economies of scale in the future. Sometimes if the business has higher market share, that can work as the competitive advantage too for the business, and business can market that competitive advantage by saying that we are the largest selling brand in the market. So these are few things behind the market share increase. Then business has another objective that is called survival. Survival is an objective when businesses are unable to maximize the profit. That might happen in certain situations. For example, business are new to the market. For example, businesses are facing an economic recession when the aggregate demand in the whole economy is falling, and it's not possible to increase profit at that time. And businesses are facing some competition in the market, and the larger competitor in market is trying to invade in. At that time too, businesses cannot increase their profit and opt for profit maximization objective. Another objective that business might have is the shareholders value maximization. Shareholders value maximization. The shareholders invest into the business for two reasons. One, they want to earn dividend by the end of year, the profit share from the total profits of the business. And the second, they want to have capital gain too. The capital gain is a concept. I told you that they might want to have dividends. Dividend is the part of profit that shareholders received by the end of the year on the profit the business has earned. And second is the capital gain. Now, what is the capital gain? Capital gain is the increase in the value of shares. Increase in the value of shares. For example, you have purchased a share of some public limited company like Nestle of $250 in 2017. Now in 2020, the share price has become $350. This $100 increase in the share price is called capital gain. The increase in the value of share. That capital gain is the value maximization of the shareholders. If business become profitable, the value of the shares rise in the future, and we might call it the shareholders value maximization. That is one of the objectives of the business too. Another objective of the business that has become very important in today's environment, that is called CSR, corporate social responsibility. Most of the questions that are tested from us from this chapter are from the corporate social responsibility. And this is equally important for A22. Let's define the concept of corporate social responsibility, and then we'll go into the details of that in a separate lecture. CSR is a situation when businesses consider the interest of society when businesses consider the interest of society by taking the responsibility for their impacts of their decision making and activities on customers, employees, communities, environment. Communities and environment. Look, there are two concepts. One is the concept that business is business. Whatever businesses are doing is for the purpose of profit, and that is the very basic right of the business. Business should focus on the profit. They should satisfy their shareholders. Whatever activity they do, the activities should be based on the profit maximization approach. But the second concept is that business and the societies are interrelated. What does it mean? That whatever business do, society receive the impacts of that, and business is earning profit from the society. So business should take care of the society. Business should take care of the different people involved with the business. That people are basically the employees, the communities, environment, customers. Business in the pursuit of profit should not sacrifice the interest of such people that are involved into the activities of the business directly or indirectly. This second approach is called corporate social responsibility, in which while taking any decision regarding anything, business always try to find out what negative impacts these activities or decisions might have on the environment, for example, on the employees, for example, and business avoid taking such decisions that can harm these people that we have made a list of. Such concept is called corporate social responsibility. The corporate social responsibility has also become important in today's environment because uh, the pressure groups are those group of people who are enforcing businesses to take positive actions toward the society and do not create such harmful effects that can damage the environment and community. So they are always pressurizing the businesses. So I was saying that the corporate social responsibility has become more important in today's environment because pressure groups are enforcing businesses. Uh, they are lobbying with the government, they are lobbying with the media, and they encourage consumer not to buy the products of the business if business continue to buy, if business continue to do such activities that can harm the environment, communities, and all that. So that is the reason corporate social responsibility has become more important in today's environment. We'll talk about separately in a separate lecture that what the details of the CSR and all that. But last objective that business might have is the maximizing short-term revenue. This is the objective that become objective of the business when business is in short of cash, for example, and business can put the products on a sale and they can be immediately sold and business might increase the short-term revenue. This can be achieved by reducing the prices of the business to increase the cash flows, for example, by reducing the prices of goods or services the business is offering. This is a short-term objective that cannot be taken in the longer run, and we cannot always offer buy one get one free kind of stuff on our products and services. So these are the objectives of a private sector business.